In this video, the report focuses on how Australia's financial markets reacted after new inflation figures were released. It mainly looks at what happened to the Australian dollar and the share market, and why these changes occurred. The video explains that inflation in Australia came in higher than expected. Because of this, the Australian dollar increased in value. This happens because higher inflation usually leads investors to believe that the Reserve Bank of Australia may keep interest rates higher for longer or delay cutting them. When interest rates are expected to stay high, the Australian dollar becomes more attractive to investors, which increases demand and pushes the value of the currency up. The report also talks about the Australian share market reaching a new record high. This suggests that investors are feeling confident about the economy, even though inflation is still above the target range. It shows that many investors believe Australian companies are still performing well and can handle the higher costs caused by inflation. Another important point shown in the video is how sensitive financial markets are to economic data. As soon as the inflation figures were released, both the currency and the share market reacted quickly. This highlights how closely investors watch inflation because it affects interest rates, business confidence, and overall economic growth. Overall, the video shows that even though inflation can be a concern, it can also signal that the economy is still strong. In this case, the higher inflation figures led to a stronger Australian dollar and higher share prices, reflecting investor confidence in Australia's economic outlook. In conclusion, the video demonstrates the strong relationship between inflation, interest rates, and financial markets. It shows how one piece of economic data can influence multiple parts of the economy at the same time, including currencies, shares, and investor expectations.